Introducing CREDI LP staking from industry-leading RWA loan collateralization platform CREDify. Earn 10% cashback in USDT after 90 days, with more rewards coming soon for CREDI holders. Visit v2.credify.finance today.
Everybody, this is Adrian Zdunchik, CMT. Welcome to today's Friday webinar. Quite a while since I actually sat down in this very beautiful studio. I missed you guys. And here we are. Ladies and gentlemen, on Friday, end of October. It's 25th of October. The October is ending. What a ride it's been so far. And this is a new platform that we are using for broadcasting, for streaming. So feel free to stop by, say hi, drop a comment, say something nice, just drop a note so that I know that you can hear me, you can see me all right, because there's lots of good points for discussion for Bitcoin, for traditional stuff, for altcoins as well. We're going to talk about SUI, about Sol, about Ethereum, Bitcoin, strong dollar, and whatnot. So let me know real quick if that's all right from what you can hear me, you can see me. And in the meantime, quite a while since I actually, like I said, just did the regular live shows. There's been a lot of traveling. The market's ramping up, and as a result, there's a lot of good events happening. Right? I just happened to be at Ape Fest this time. Luckily, I didn't get blinded into my eyes. Although heading soon after to the Binance Blockchain Week, and the space is really lumping up. The space is really heating up. There's a lot of good things happening. The institutions are here. Larry Fink is here, CEO of BlackRock, talking about Bitcoin and crypto as a flight to quality. Vanguard, Vanek, Grayscale, ARK Invests, ARK Investments, and so many other ETF providers that generating over 450 billion of the spot Bitcoin cumulative turnover for Bitcoin alone. And here we are. The space has matured so much ever since we actually saw those big retail numbers pumping in, and it's been a while since 2021, and we are probably about 15-20% of where we were in terms of the Google searches, in terms of the YouTube views, the overall engagement on social media, which means that we are early, ladies and gentlemen. Hi everybody, this is a very early stage that we are in, and the markets may prove one thing in terms of that the bull market has been present since the end of October 2022. That's actually that today marks, I think, 2 years of ever since the bull market stepped in for real. There was the massive turnover and the massive reversal on the traditional side of the finance, as well as crypto market soon bottomed out after the horrible year of the Luna crash and of the FTX collapse. And here we are, so much higher. Bitcoin knocking on the door of $70,000 all day long, all week long, all month long, past couple of weeks, even though it has been in the massive consolidation / corrective tide going on for the past 200 and I think 220 days, if I'm not mistaken. That's quite a while. And everybody seems to be on board except for the retails. Everybody seems to be on board except for the normal average traders who are yet to discover Bitcoin. And guess what? They typically tend to discover, most of the people tend to discover Bitcoin and other cryptocurrencies too late, which means they are prone to get on top of the market instead of getting early. So right on, without further ado, let's take a look at a couple of charts that we have in front of us. Let me actually just head over real quick for a quick kind of like a market recap preview. And let's get it over here. What we're looking at, there you go. What we're looking at is a Dow Jones Industrial Average right now being at 42, almost 500 points, 0.23% up. S&P getting closer to this magical boundary of 6,000 points, 58, 52 right now. Quite a massive push right there. Beautiful chart. What a strong looking chart. The moving averages, greens, semi 20, SMA 50, SMA 200 at the bottom, all of them showing upward curve. And guess what? This means a bull market, right? If we go further, I always take a look at the energy sector ETF that is 90.28 right there, with a lot of chop, a lot of noisy oscillations between 83 marked the low of September and the high marked recently in the early October of 94. Quite a massive push. The 200-day moving average keeps moving a little bit up. 50-day average, the blue one, keeps kind of like, just moving in a slightly declining mode, declining slope. And the 20-day average locally consolidating, stalling after the recent push to the upside in October. So all in all, spike in energy. The inflation numbers have been up over September overall, which drove the CPI higher, brought a lot of corrective tides across the markets. But here we are, airlines pumping pretty well. The banks are slightly on a negative today to 0.24% red. However, there's most of the kind of like industry indices are green, and that's a good thing because green means making money. USB, the 30-year bond prices 0.64% up after massive slide from 127 points down to 118 points below 200-day moving average again. So quite a slide right there, and all of that happened, like I said, mid September. The last couple of weeks, basically being still right out, like I said, as a corresponding with the actual inflation rates. And if we go further down this path, then gold all-time highs kept gold keeps printing all-time highs, 27.50 almost. Silver waking up 33.79 after recent push towards 30.35. That's quite a push, quite honestly. If you take a look at the silver, it's the highest it's been over the last several years. That's a massive push. The 40-week average, sorry, excuse me, it's ramping up as well, moving to the upside. This blue curve in the middle of the chart, and that's a good thing. That's a good thing, right? 200-day moving average moving up as well. So all in all, good markets that are driven by lower inflation, the monetary interest rate policy kind of like being right there at the edge, and the actual shift after the recent 50 basis points rate cut. Now, U.S. elections are ahead, and well, it seems there's a lot of good things for the markets overall. How does Bitcoin bear all of that? Well, let's take a look. The daily chart, just like I said, it marks this massive long consolidation correction actually that happened over 226, almost 230 days. Jesus, what a long correction it's been. Ever since marking the peak at $74,000 right over here, we were seeing this consecutive series of lower highs and lower lows that took us to the lows of 49.50 when the Bank of Japan kind of like almost crashed right there. With a lot of stocks, Nikkei 225 just crashing to the levels, or actually I should say at the speed of crash unseen since 1970s, if I'm not mistaken. This is the financial crash. The RSI is actually above the 50-day moving average, which is a good thing because it means we are outperforming the average stance. However, it's nothing really extravagant just yet, nothing extraordinary. Right, so we had an attempt of a $70,000 breakout, almost $70,000 breakout. We kind of like, ever since bottoming out in 49.50, we kind of like just continue to make those higher highs and high lows, and that is a new thing, because until that point, we had this massive kind of like a decline step by step. Right, we continue to move lower, right over here, and when we finally marked the low in August, which is typically a weak month, August as well as the September, we've looked at a consequent series of higher highs and higher lows, and here we are knocking in a $70,000 door, consolidating in the area of expected resistance. Right, the $68,000-$70,000, those are round magical numbers. They had been always expected resistance. So here we are. Declining volatility is something as well to consider. Because declining volatility means consolidation terms, right? We are still low. We are still below the 50-day average of the volatility. Volatility means risk. So on one hand, it means that the Bitcoin investments are safer than they were, for instance, at a peak at $74,000 because of the volatility at the level of $4,000. Here we are at not even $2,000. So the volatility is sliced almost 50%, or actually over 50% to the downside, making Bitcoin twice as safe as it was before. That attracts a lot of investors because safety is what all investors like. So all in all, if we go a little bit deeper and further, the proprietary investment systems that I use, for my own trading, that is otherwise called Barbicator Pro. This is like a set of different strategies, indicators, systems put all together that we can manipulate and kind of like adjust to our needs. This 200-day baseline, it is like a simple moving average, except that it's custom, is proprietary. It's correspondent more with the more recent data. It's a little similar to the EMA, to the exponential moving average, that uses those geometrical terms right there to assign more importance and more relevance to the latest recent data. And here we are, 200-day moving average in the black curve. It's kind of like slightly melting down. It's slightly, slowing, I should say, although the decline from 6,400 all the way down to 63,200, it's a very marginal decrease. So I wouldn't necessarily, I would more classify it, to the sideways, kind of like a regime, rather than an actual kind of like a bear market reversal or anything like this. Massive movements right there. Like I said, higher low and a higher mark 65K, higher low, higher high, and so on and so forth. And here we are, $70,000, almost broken. Again, we are hovering around the previous area of weakness, right, where the rejection happened, which means we are consolidating and perhaps potentially taking back the area that we lost on the previous time we were here in July, when the market showed a lot of weakness. So here we are building the strength. The trends have shifted. Right here it was to the downside. Now we are to the upside. Higher highs and higher lows is a good thing. There is not a single uptrend in a technical analysis terms, in a word, where the uptrend would move downwards, and the other way around. There's not a single downward trend that would move upwards, right? So all in all, we're looking at a solid recent trend reversal prospect, right? And so far, we've been in such ever since August, since, like I said, early August, and that makes a lot of good, uh, a lot of good reasons to stay optimistic about the future. If we are to take a deeper look at the very systems of mind, Bitcoin is right now kind of like attempting a breakout over the resistance, which it just established with a recent kind of like a slide below $66,000, 66,600, all the way to the 65,000s, right, or even below. The daily high time frame trailer basically support is at 63,000. So that's just a very firm, strong support. So whatever happens, we should search for strong support in that area. Otherwise, the local support, if the daily closes above 68,300s or 400s ideally, then bears might be overtaken. Just one more time, once again, for the sake and in favor of the bulls, $66,000 approximately. And if that's the case, I'm going to re-enter my position right over here and over the daily close. Reminder, I'm a trend follower, position trader, so I only take a position that lasts typically approximately 14 for 18 days, established and dedicated and printed and directed by this very proprietary system that I'm showing you. At times, those trades last for several weeks, for months. At times, they are getting extremely choppy, especially when there's a lot of sideways. Trend following means we are reacting and positioning ourselves in the direction of a trend, right? So we get chopped on the local corrections. However, we maintain and pertain the overall trend and tendency for the market to persist in one direction or another, and we capitalize on that. All right. So if we go further, just a final kind of like a point right here, because we're still kind of like moving within the sideways territory, right? Like I said, there's not a single bullish kind of like a significant breakout. We're consolidating right here. We even have a local overthrow at the bottom, like I said, over the technical support that we had at 66,600 that align on the short-term basis and on the medium-term basis, as indicated before. The high band right now provides resistance 69 through almost $70,000, 69 through 69,700, with the support of 65,000, I should say, all the way to 65,600, 700. So all in all, this gives us a little bit of a space, right, that I could anticipate this region to be of resistance, this region to be of support. And guess what? The highest density, the highest probability of Bitcoin price action you can expect to be in that region between this support cluster and the resistance cluster, based on the RSI, based on the volatility. It's similar to the Bollinger Bands, except it's not Bollinger Bands. It's based on our proprietary moving average, the B-Pro baseline. And well, it takes 2 standard deviations to the top and 2 standard deviations from the bottom, which means that it covers widely, in the efficient market terms, about 96% of the probability that most of the time you're going to have market inside of those boundaries. If you see the market just weeks outside, it's either going to be an immediate reversal or it indicates a massive trend reversal finally. So all in all, we are trapped in a range. Here we are. I promised a little bit of a take on the SUI, right? I was playing up a little bit inside of our trading community, inside of the Burp Nest that's been going since 2017. What a wild ride. It's going to be soon the, what's it going to be? The soon 8th year is going to start rolling, right? Quite a significant push and massive milestone right here. We had on the SUI part, we had a massive kind of like an all-time high breakout attempt. And even though there's been a lot of stalling, it's easy to get chopped at a high time frame trailer stop at around $1.93 right there. There's been a massive increase. And this massive increase is right here, basically 400% in just a matter of 2 months. So 410% in just a matter of 2 months. And for the comparison, Bitcoin did only, or I should say not necessarily only, but in the traditional terms, it's going to be a lot. But for crypto, it's going to be 4,900s all the way to this level. It's going to be 40%. Quite a massive ride itself as well. So here we are, 400% Bitcoin. So we are outperforming Bitcoin by 10x. Quite a massive push right here. And whatever we say, the support, if we take it to the daily chart, support is around 1.3, dedicated, like I said, and provided by this 200-day B-Pro baseline. That is undisputable. Well, quite a strong support over here. So whatever happens, if we slide below, if we close a massive candlestick or a bar below and reject this kind of like a attempt of an all-time high breakout finally and undisputably and undebatably, then it may happen that this 1.3 1.5 kind of like a region is going to act as a proper support. There's a previous area of interest, if you will, around 1.4 1.5, and it conjuncts somehow with the support cluster at 1.3. And otherwise 1.11, which is where 1.17 or 14, which is where the 200-day moving average is, for those who actually see it, this light gray curve right here. So all in all, lots of support below. Now, quite a massive slide if we are to lose the current support. So for the sake of the traders, losing 30% is not necessarily the best idea. So, here we are attempting of a breakdown with the high time frame trailer stop resistance at 2.21. So if we break and close below 1.9 approximately today, the 2.21 resistance activates, and it's going to be a little bit of a tug of war right here until we break 2.21. So all in all, point to observe as well is that we lost the support that we had going for quite a while right here with SUI, right? We kind of like had a little bit of a battle here where the market slowed down. There was a little bit of a bearish RSI divergence on top, where the prices kept making higher highs and the RSI kept making lower highs, meaning that basically there was a decreasing momentum on the way up. Decreasing momentum on the way up is basically like a truck, like a speeding truck that you take a foot out of the gas pedal, and it just slows down. It just decelerates. When it decelerates, it finally stalls, or I should say, stops. Right, so all in all, here we are, the tug of war. The bulls are fighting the bears right now at the key support, and if it's lost, the bears are going to take over, at least for some time, for the foreseeable future. And if we are to take it even further, there was a point about Solana, right, which are often many traders, many people would say and argue that SUI is going to trade closely dependent to Solana. And here we are. Let's take a look. Let's take a look. 200-day moving average, what a conjunction of several indicators. 200-day moving average, $150 support. 200-day B-Pro baseline, 4,007 support. So we are below the 200-day simple moving average support. This is kind of like less less relevant or less recency biased than the 200-day B-Pro trend line, which basically gives you a little bit of a more up-to-date information, right? without ignoring of the recent data. The BPRO setup on the high time frame trailer side provides you with a bullish kind of like a breakout right here recently over point 163, which was this massive line in the sun, 1.63, 163, 160. And this turns into a proper support, right? We have this technical term of a polarity change where the broken resistance turns into a support. And if that's the case, this means that the market is more likely to continue in the direction established by the main trend. In this case, except that it's in this case, that main trend seems sideways, right? We're looking at quite a sideways territory overall, right? 200-day moving average is sideways right here. 200-day BPRO trend line is sideways. And we are just kind of like I said, breaking out a little bit on the upside from the recent stalling at 163. So all in all, good things so far. There's an attempt of a breakout, and it's good. It's confirmed. Support at 160 approximately. So we need to keep and hold the support. As long as we keep it, the bulls are safe, right? But we are still very close away from the support, right? It's what is it, 8%, 7%? So one bad day, one bad move on the Bitcoin side, one small shakeout may actually take the things and reverse them. So Sui, I was promising, I think I promised you guys Ethereum as well. So let's take a quick look. And in the meantime, before we take a quick look, here's a quick shout out as well to our partners at CREDI on KuCoin, who are having quite a reversal day today, right? This local kind of like a slowdown with the 200-day BPRO trend line stalling and the 200-day moving average kind of like reversing to the downside a little bit. We had this case of a descending triangle over here, another descending triangle over here. You can see that there's quite often a lot of randomness. I should say that descending triangles are not necessarily the most reliable technical patterns, right? I wouldn't say there are like some strong odds into following those. At times they break up, at times they break down. However, all that matters is that with the special admiration that I have for our partners at CREDI, basically, and what they do between bridging the Web 2 and Web 3 with their WA tokenized bonds, and the IBAN service that they recently launched. There's a lot of utility on the CREDI and XCREDI that they have, and quite a significant push of 2.2% later as so far today. And if that's the case, it might be actually some sort of like a reversal point in the area of support, right? Because that's where the support has always been. 0.13.14 is where the market reacted positively before. The traders scooped up this opportunity. The bargain hunters came in, kicked in, and that might be the case, right? So we'll see. Maybe the support is going to get defended over here as well. It's just an interesting thing to watch right now. Key resistance at 0.019 approximately, which is where all the conjunction of all the resistances, moving averages, is alongside with the bearish setup of the BPRO trend line, high time frame trailer. And I promise Ethereum. So here's going to be a quick look, and this is a weekly chart on another case, on another note. The weekly chart is moving down so much more aggressively than Bitcoin overall, because Bitcoin had lost 30% from the 74k down to 49,500. Ethereum lost 50% approximately. And we still didn't break even the all-time highs. Bitcoin broke the all-time highs, went higher, and it took the correction, at the same time that Ethereum did, lower, two higher regions of 49,500. Like I said, 40% retracement. Ethereum did pull lower. And if that's the case, it actually encourages more bearish stance right here. So there is some consolidation going. It looks a little bit like an ascending triangle on a weekly time frame. And if that's the case, well, technically the support has been held at the previous resistance zone where the rejections previously happened, 2200s, 2300s. Ever since the breakout, we pulled back and it kind of like retraced this entire breakout to the downside with a 50% slump, like I said, and now trying and attempting to build a base inside of this encapsulated kind of like a price action, reminding me of the ascending triangle where there's a sequence of flat highs and increasing lows. And if that's the case, the conjunction towards an invisible apex here, may actually react as a spring, because traders' anticipation take over, Bitcoin's positivity take over, that is imprinted in the statistical terms for the 50% average return for the quarter four. And all in all, we observe a lot of anticipation, right? The ETFs on the ETH as well. There's been some overall mess, right? Massive underappreciation against Bitcoin. So if I were to choose Bitcoin or Ethereum anytime, any day, right now, I'll choose Bitcoin, which is relatively stronger. The strength of relative technical analysis, so-called relative analysis, right? Uh, or intermarket analysis, or relative strength, basically. Not relative strength index, but a relative strength on its own. So all in all, I'm gonna take a couple of questions. Let's take a look at what we have. Honorata, all good right there. Pony, GM to you as well. Cadman, what's your target for BTC top? Which major would do best in your opinion? Bitcoin, if so, interesting. So I reviewed the Sol already. So like I said, it's I think it has a lot of capacity to kind of like be the big ether and just maybe just maybe play it out. I mean, let's see what the market cap is. The Solana market cap right now is the number 5, is basically right now 82. Let's take a look here. Right, the Solana market cap, I mean, we are right here. Solana market cap is basically 82 and a half, almost 82 billion and a half. That's pretty small. Ethereum is 300 right there, so it's so much bigger, right? So it's a 3 to 8, 3 to 9 kind of like a situation right there. It's quite big, quite substantial, almost 4 times bigger, 3.5 times bigger, if you will. So it has to take over a lot of money for Solana to take over Ethereum or to replace Ethereum. Not to mention Bitcoin, right? Because Bitcoin is like completely outside of this league. That's a massive difference of a couple of zeros. So all in all, I should say with a market cap of 1.3 trillion for Bitcoin, right now, not even pushing the all-time highs just yet. That's quite substantial. That's quite massive. Altogether, Bitcoin and Ethereum combined, they probably capitalize for about 80-90% of the entire market capitalization. Well, maybe less, I should say, right? Because the market dominance for Bitcoin, if we are to track it real quick, now the market dominance, let's see if it's going to show up real quick. Simply, is it going to show me the market capitalization right here? No, market capitalization, I mean the dominance. All right, I think we're just gonna have to go for this one. So, Bitcoin dominance chart. I was avoiding to kind of like go ahead and open the new whole chart. 59%, right, for Bitcoin dominance, which means 41% is left for the entire Ethereum. I should say entire altcoin kind of like a scene. And let's take a look at Ethereum dominance. And Ethereum dominance chart is at this stage 13%. So it's 59 against 13. That's quite a substantial difference, right? Still 13% of the entire market capitalization for Ethereum is massive. So all in all, if I were to choose Solana, Bitcoin, or Ethereum, well, privately I would choose Bitcoin, right? Because of kind of like, stronger. It's the first one, right? So the reliability and the market capitalization, the liquidity side of it is the strongest with this one. However, for the growth opportunity, right, the stability and the growth opportunity are two different things. For the growth opportunity, I would argue that Solana might be actually bigger. So far, Ethereum doesn't really show much of good return side. So yeah, take it with a grain of salt. You don't think using indicators might not be the best method? Maybe using just candles could be accurate. So candlesticks are expression of 4 price points: open, high, low, and close. The price movements indicated in the candlesticks are basically indicators. Price action is an indicator on its own. So it's impossible to use technical analysis and not use indicators, right? Because that's exactly what we're doing. And whether it's candlesticks or just the RSI, for instance, right over here, then it's all the same source of data. It's all the same numbers. It's just that they're presented differently, right? You don't have to, like, if you observe a sequence of higher highs and higher lows on the candlesticks, right, then you're going to observe a series of higher highs and higher lows, most likely on the RSI as well, most of the time. If there's divergence, that's divergence. That divergence is very much alerting. So all in all, price action is considered an indicator, right? So we use, so we do use actually the entire price action analysis, technical analysis, the indicator analysis, right? Price action is an indicator. Candlesticks are indicators. Some people call it price naked chart analysis. It's just, it doesn't have different types of indicators, right? Because we have the breadth analysis indicators, the time indicators, the momentum indicators, the volatility indicators, percentage movement indicators as well, and so on and so forth. And it's just the way we present it. Otherwise, they all come to one and the same data source. So yeah, fair question though. Very fair question, very honest question. I like honest questions. So feel free to pop them in as much as possible. And before I'm gonna have to run, there's gonna be like a special shout out as well to our partners at BitGood, right? Because we partner up with BitGood, we have a proper collaboration, and with them, it's impossible that you guys enjoy basically a quick instruction. Because if you sign up with a BitGood link of ours, right, that's going to be in the video description to this very video we're watching, and I'm going to drop it as well in the comment section. If you complete 3 simple steps on the page, you're going to receive withdrawable $20 from BitGood. So it's basically like a free $20 voucher. I mean, it's not a voucher, it's just a $20 USDT withdrawal. You can withdraw it immediately and just spend it on whatever shitcoins you like. So it's like a gift and present from our partners at BitGood. And then if you claim the present, you're going to be eligible for claiming 7 days free access inside of the Nest Club with all the trading education, with all the webinars inside of our VIP community that's been going since 2017, as well as the psychology tips, a lot of fundamental analysis, early gem picks of ours, early reports, and early access to all the information before everybody else get to see it. And it's all going to come for free to you. So this is a special offer that we prepared for you with our partners at BitGood. So shout out to them. They're keeping the great work. And yeah, final point I wanted to show and to kind of like just leave everybody with. What I often like to refer to is in terms of how mature we are in the space. Per October 23rd of 24th, the MVRV, which is the market value realized value Z-Score. Z-Score is a statistical terms giving you basically standard deviation terms, right? But all in all, it tells you how many standard deviations we are when expressing the MVRV. And the market value, realized value, is 2 different things. The market value is a market capitalization. So it's basically this 1.3 trillion that we have on Bitcoin side. And the realized value is basically the summary of all the Bitcoin transactions, of all the on-chain transactions put together. And what it tells me is that the ratio right now is at 1.97, 1.90, what it was, 1.92. So there is a little bit of a double bloat on the market capitalization against what it was by the realized terms, by the blockchain transactions themselves, which means there is more money in the markets than just the transactions, right? So there is some stocking up of the value and behind the scenes. And if you take a look at what happened historically at the key peaks, at the key areas of where the market peaks come in, the Z-score, the standard deviations counts for the Z-score were 7 before they were 10, and the peaks were 9.94, 49, and even here it was above, if I'm not mistaken, 11, right? So all of them were in the red zone, and this red zone is above 7, and here we are 1.92. So if we were basically to top right now, today, just provide a proper Bitcoin top, then what it means is if we divide 7, that is the historical kind of like a peak information warning sign, by 92, it gives us 3.6x, which means that we would have to literally pump 3.6x from current prices and 3.6x pumped, basically, just to give you the cool, like the full numbers, by multiplied by the current Bitcoin price of 68,165, that lands us at almost $50,000 peak. So if we were to follow the path of the previous peaks alerted by this massive fundamental on-chain analysis, kind of like a picture, an alert, and a warning that for this historical data to trigger the warning signal for us that Bitcoin may be about to peak, we would have to literally be, by simple mathematics, be at around $250,000. And guess what? We are at 68, which means that historically against where we were in the peaking area, we're nowhere near close the top. We are yet to have some good fun in the coming months. And with that, ladies and gentlemen, I'd love to leave you with the good vibes and the good notes, because I appreciate all you do. I appreciate that there are almost 2,000 people watching this live. So huge shout out to everybody who's watching. You guys are early. You are early. You are behind, or I should say, before everybody else. And that's a massive thing. That's a massive thing. So shout out to everybody who's watching that. Thank you for staying up to date, and thank you for choosing the Burbness for the education.